So where can we go from here? Like, should we expect to see things turn around? So in the sense, we've got sort of kind of trying to think about what the leading indicators are for inflation, what guides inflation, and where we go. And like, obviously, the kind of the strongest sense we can get is about the very short term, and those kind of things we can be looking at. What the leading indicators for where inflation might go. Well, if you look at PPI, we've looked at the PMI input prices, so that's reduced every month. We've got the 10-day industrial series price, which I talked about during earlier in the video, and that provides a lead for PPI inflation for a couple of months or so. We can look at global commodity prices. We can look at the US dollar. All of these things are relevant for where PPI inflation goes, except for the US dollar. None of those things are suggesting that PPI inflation is going to be bouncing back very strongly, despite the fact that some of these, the government's been focusing on involution and cutting supply. So I think in terms of PPI inflation, the short-term outlook still looks like we're going to be stuck in PPI deflation in China. So that's one thing to be remembering. In terms of CPI, in terms of these sort of leading indicators we can look at. So rather than thinking about the drivers of CPI, trying to look for things which, other price measures, which then gives us a strong sense of where these price indices might be going. The one thing we can look at for CPI is output prices in the PMI, the Purchasing Managers Index. That, I wouldn't say it's a close guide to where core inflation goes, but it does tend to be a guide where core inflation goes in China over a 6-month view or thereabouts. And output prices in the Purchasing Manager Index are still falling. They're still negative. So I think both in terms of the upstream side that we have at the moment and in terms of the downstream side in terms of consumer prices, there's no sense at the moment that inflation is going to turn around, that the nominal cycle in China is bottoming out. Now, why might I be wrong on that? What would be more positive story? Why will we start to things turn around? And the one thing that I can point to is this chart. So generally speaking, this relationship, this chart, when this chart is falling, so when people are moving money from demand deposits into time deposits, it tends to be when the economy is deflationary, when things are slowing down. So the one thing to be highlighting at the moment is that it does look like this is bottoming out, that this has been falling for several years now. This process has been one where the economy is getting worse. It doesn't look like it's getting worse anymore. So as sort of a second derivative thing, which is important for markets, it does look like we could be close to a change. So that is one thing to be highlighting. But my overall sense in thinking about all of these things is that there's sort of, I guess, like a 30% probability, let's say, that this is a real bottom for the nominal cycle in China.